Bitcoin. All right, let's rock and roll. Good morning, good afternoon, and good evening, alpha traders. That is why you take your profit. I'm screaming at you right now. Capital letters. Take your fucking profit. Or this is what happens. Especially when you have an awesome indicator like the alpha trading volatility range estimator with our standard deviation levels on them. Can't go wrong, right? Bitcoin starts out the new day. Tight daily range, right? Tight daily range. That daily range was right at the bottom or right at the top side of the 68.3 Laplace distribution range. Okay, literally the 68.3 in the center of the daily volatility range, which is this red line to this red line, super tight. That's probably about 0.03%, I would imagine. Pretty tight damn range. We mess around here for a little while. What is this red dotted line? That is the bottom side of this week's price action volatility range. BTC for half the day got stuck right here, right around the bottom side of the weekly and the top side of the 68.3. Found support right here, literally early in the morning. What time did we get this first big 15-minute candle? Right at pre-market for traditional. 5:30 a.m. Pacific Standard Time. Immediately, where's it pumped to? It goes right up above the center of the weekly price action volatility range. That's the yellow dotted line. And closes above the first standard deviation, the blue cross line. The first standard deviation normal distribution. Finds support there. Then 45 minutes later, 3 15-minute candles, it rockets to the second standard deviation normal distribution. Take your profit, right? Hell, you should have taken your profit at the top of the weekly range. People get greedy. You literally get by the 95.4 Laplace distribution range. All you out there in YouTube land that have been watching YouTube Jimmy getting wrecked day after day after day, study the distribution, understand the probabilities, understand the percentages. I scream at the computer every day to you people. This is all about numbers. It's all about probabilities, right? When we got up to the second standard deviation normal distribution, there was a 95.4% chance Bitcoin was not going to close a candle above that range on the daily. And not only did it do that, it dumped. It dumped back into the 68.3% Laplace distribution range. Why did it go there? It's in the numbers. There was a 68.3% chance Bitcoin was going to make its way back into this range. Does it happen all the time like that? No. This should have been a wake-up call, though. When you reject off the 2SD, which you should, it tried to find support on top of the 95.4, dumped down. Look where this wick went to and rejected from. The bottom side of the 95.4 Laplace distribution range. We'll go into the regular chart here in a minute. I guarantee you this pump and that dump, plain as day, cha-ching. So, if I would have got in on this rejection right here, where would I have taken my profit? I would have probably taken my profit on the top side of the 68.3. Right? And now I wouldn't even be in a trade right now. I'm waiting to see what Bitcoin's going to do. When you get a tight daily price action volatility range like this, that is telling you Bitcoin is going to trend. Did it trend? Let's get the measuring tool out here, ladies and gentlemen. Let's take it from there. Okay, so Bitcoin first trended to the top side 4.48%. Then trended to the downside 5.9%, over a 10% move on the daily. Okay? Crazy. Up, down, boom. Now we're back in the 68.3 Laplace distribution range. Do you know how many people out there did not take their profit? Do you think they got jacked right there? Of course they did. Of course they did. Let me let you in on a little secret here. All these YouTube jimmies out there, these so-called traders that are a joke, spread the word. Tell them Bilbo said they're a fucking joke. They're teaching these risk management strategies that are ridiculous. Where do you think all these jokers had their stop loss at? I think maybe probably down here under this data set probably. Look at this wick. It always happens. They all got stopped out or liquidated because they all got over leveraged, right? This was probably some liquidation fuel here. Now, I'll tell you what we'll do real quick. We were playing the drinking game. Shots up. I just said I'll tell you what. Let me see here. Where are you? Give me 1 second here. Where is? Got way too much. There it is. Bitcoin liquidation. So let's see what just happened. Oh, let me see here. What are we on? We on the 4 hour. Well, just this last 4 hour candle, that 138 million. Let's go right. Just not everything. Let's go to Bitcoin. Yeah, 41 million. 41 million. In the last hour, 36.5 million longs got liquidated. Now, on the overall scheme of the market, is that a lot? Not really. But 36.53 million people just got liquidated. Insanity. I don't understand why people don't realize at this point, especially with a volatile asset like Bitcoin, how to trade this, man. You got to take your profits. Learn the distribution. Learn the percentages. Where's my candied ginger? Let's have a little ginger snack here. I mean, for Christ's sake, man. Unbelievable. Now, we just had a new member join a Discord. Used to be a market maker in Nasdaq. Bravo. I'm glad you found us, man. He's understanding everything that I am talking about right now. I guarantee it. He's probably laughing if he's watching this video. You guys, you got to take your profit. That's what it's all about. Do you think these guys become billionaires because they're not taking profit? They're taking their profit. Hello. And all these people just got wrecked. All these people just got wrecked, man. All right. Look how fast it happened, right? I mean, literally, do you guys realize we just did a 4 standard deviation move on this last 4 hour candle? 4 standard deviations. Skinny blue line right here, hiding at the top of the 90, or hiding at the top of the 68. Wait a minute here. Hiding at the top of the first standard deviation in the center of the weekly range. This little blue line, that's the first standard deviation, normal distribution to the downside on this last 4 hour candle. There's the second. There's the third. There's the fourth. So, of course, we got to bounce there. The probabilities are really high for this to close in this range now. Okay? But what the hell? And look where else it bounced. Not only was the 4 standard deviation right there, you've got the daily S1 for this daily volatility range. Okay? Wreck. If you do not take your profit, you will get wrecked. If you use shitty risk management strategies, say they got in the move right here, and they put their stop loss below this data set using some stupid ass, oh my God, it's ridiculous. You're stopped out. Even if you go back to this data set, you're stopped out, right? We just saw on the chart, almost 40 million people in the last hour, $40 million got liquidated. There's no excuse to get liquidated. It should be a wake-up call to you. If your accounts are getting liquidated, you need a new job. You need to go find another hobby if you are getting liquidated. Has Bilbo ever been liquidated? Once. I'm not a dumbass. It only took one time of using leverage and getting liquidated before I realized that shit's poison. There's a reason why all the exchanges offer this leverage. It's like a drug. It's a gambling addiction. I talk about it every stream. Go to the casino. Go play blackjack or craps or poker. Give yourself a chance. Don't use leverage trading, man. You're gonna get wrecked. The exchanges probably have hitmen looking for me. And trust me, there's a lot of high-frequency trading firms, hedge funds, things of that nature. They don't like the things we talk about here. They don't like us telling people they need to learn about the distribution levels. They need to learn about volatility. They don't want people to know about volatility. They don't want people to know about the distribution. It's just the way it is. They've been taking advantage of retail traders for decades. Options traders know a lot about volatility, right? 100%. They've been using volatility for a long time. But as what most people don't know is that these high-frequency trading firms, since the beginning of algorithmic trading, they have been programming their algorithms with the distribution, with volatility, right? Statistics, Z-score. I mean, it's a no-brainer. Let's see here. Let me read this chat real quick. I'm on a rant. I'm on a rant about all the...
Good, man. I love it, dude. I love it. It's awesome.
Ranting about the YouTube jimmies out there teaching people traditional technical analysis.
Yeah, man.
Shitty risk management strategies.
Yeah.
Right? Onloading them onto exchanges to leverage trade. Leverage is bad. Smart money does not use leverage. Smart money has patience. Smart money plays the long game.
Yeah.
That's what we do here at Alpha Trading.
Smart money doesn't use chart arts, triangles, and silly gimmicks. They push it onto other people.
100%. 100%. Let me go over here. Boom. Let's check out the distribution, right? I got a couple Laplace distribution projections. This farther back projection with PB2, I've got it from the 50% pullback we had from 60 to 30. I think it got down to about 29. And you can see, where did it wick to? That red line right there is the 99.7% Laplace distribution range. There was a 0.03% chance that candle was going to close outside there. You're usually going to get a massive bounce off of there, and it did. This is a weekly chart. It got down to 29.5. By the end of the week, candle sucked back up about 6K. Went sideways, came down on this weekly candle, tested out the 95.4 current candle Laplace distribution range, found support back up inside the 95.4%, right? There was a 95.4% chance during this projection, Bitcoin's data set was going to find its base back in here again. And then what happened? It made a run to the top side, right? Made a run to the top side, back up to 52. Pulled back. Look at the next week. Where did the next week go to? To the dollar. That little pink dot, 95.4% Laplace distribution range. Bounced from there. The next week, it ranged inside the 68.3% Laplace distribution range. We open up the next weekly candle. It drops again to the dollar, to the 95.4 Laplace distribution range. Pulls back up. Then Bitcoin starts its pump again. That's where I start the new projection. That's where I start the new Laplace distribution projection. Why, Bilbo? Why do we do this? Because we want to know the percentages. This is a numbers game. It's all about math. People out there using chart art and RSI and all that garbage, you're going to get yourself in trouble. You really are. Look at these two weekly wicks. Where did they reject from? To the dollar, I might add. The 95.4 Laplace distribution range to the top side. There was a 4.6% chance Bitcoin's going to get out of this range to the top or the bottom, right? And now look, we get the pullback, right? After the 70K high. This weekly candle right here, that was the 67K rejection. And look what's going on here. We found support from the mean of this projection. Go sideways, then we get the 70K high. But what happened back here on the weekly, I'll show you in a minute, on our regular trading chart with our returns oscillator, the only divergence that matters in these markets is the divergence between price action and returns. It's literally telling you, hey, trader, the return on your investment is diminishing. Take your profit or face the consequences. It's that simple. Then we pull back. Look at the wick. Where does it wick to? To the dollar. And the third, that blue dot right there, that was the third standard deviation normal distribution, was right on top of the bottom side of the 68.3 Laplace distribution projection. Sucks up from there. Now, I talked about this 2 months ago. I did not want to see this happen. Why? Now we're stuck in this 68.3 Laplace distribution range on this weekly chart. Bitcoin is holding on by a hair, man. On the top side of the, or on the bottom side of the 68.3. We keep trying to dip below it, right? And I've talked about this before. As long as Bitcoin continues to close these weekly candles up here about 40.5, everything's fine. Everything's fine. If Bitcoin starts closing, especially this week, going into this weekend, they try to dump this market out, start closing some daily candles below that. Let's even be safe. Let's say 40K. This could be ugly. Why? Because we use a distribution. You guys, what's right at 20K? The 99.7% Laplace distribution range on this projection. I'm telling you, if BTC breaks this range, look for 32K real fast. It's going to get there. And if that doesn't hold, now why do I say 32K? Let's go to the monthly real quick. Second standard deviation on the monthly is $31,924. It's that little blue dot right there. The 95.4 Laplace distribution's at $30,200. If that area does not hold, we will see a $20,000 Bitcoin. All right. And this is just the percentages, right? You can go back as many streams as you want. There's very few people out there that, number one, will talk about the probabilities to both sides. They're either on the bull gang or the bear gang. They're misleading. All they want is YouTube clicks. They want people to follow them. It's a joke. We're not here for that. That's why we have such a tight-knit group of people that want to learn how to volatility trade. Why would you not want to be on the side of the algos? Everybody claims, hey, the algos, man, they're programming their algos with the Fibonacci. It's like, no, they're not. And if they are, they're getting eaten alive by the real algos. I guarantee it. The proof's in the pudding. That's why our coders put together these indicators to show people how powerful the distribution projections and current candle levels are. They're incredible. Bitcoin's data set is stuck in this 68.3% range right now. Until Bitcoin gets back up above 55 or breaks below 40, guys, this thing's going to range. This thing's going to range. Now, in my opinion, because of the bull div between returns and price action on like 5-day chart, weekly chart, is that at some point we're not gonna break to the downside. But listen to me, this is just my bias, right? And I don't talk about it very often because I don't want people going, oh, Bilbo said we're bouncing from here. I'm gonna get in along, and then Bitcoin goes to 32 and you're wrecked. Don't ever follow my bias. Learn how to use the indicators. Learn the percentages, right? What is the percentage? Right now, there's a 68.3% chance Bitcoin does not break this bottom range. So there you have the numbers. You know, in my opinion, we're going to range in here. I talked about it when we dropped down. I was like, be prepared. We might be ranging in this until the end of February. Guys, we got 5 weeks, right? Almost 6 weeks left. This thing could be just ranging. ranging, driving everybody crazy. Because if we go to the regular trading chart, let me get on the index there so I can pull up some high time frames. And for anybody new out there that's watching this on YouTube, you know, the first thing they're going to say is, oh, analysis by paralysis. It's like, yeah, for all you traditional technical analysis traders that don't even know how to trade to begin with, yeah, that's probably what it's going to be. But is what you don't realize, this entire chart is used as a whole. I'm not flying a Cessna here. I'm flying a freaking stealth fighter, right? I look at the chart as a whole. It is giving me a signature. And everybody knows how I do my workflow. I start on high time frames and I will go all the way down to a 15-minute chart. And that will give me my intraday trading, right? That'll let me know what the probabilities are of which way I should be scalping. Where's my capital going to be best used, right? Because I'm all about no risk. And if it's telling me that all my scalps should be to the top side, that's what I'm doing. If it tells me all my scalps should be to the downside, that's what I'm doing. So let's go to a weekly here first. Whoops, 7-day. We'll get to that in a minute. Come on, populate TradingView. Another thing you'll notice, TradingView does not like our indicators. All right. Let's see here. Yep, boom. Hey, come on. There it is. Yeah. So on the weekly, what you're looking at here is the Z-score of log returns. Now, it's a powerful indicator, right? We've got several settings in here. You can use it. You can use the mean of log returns as a source. You can turn on root mean square. I like to run it. I want the log returns, right? Because I want to know the divergence between log returns and price action. So right now, and I'm telling you, this is becoming pretty borderline at this point. There was the real bull div. There's still some from back here. Is right here, right? This low and this low. We got higher lows on the Z-score of log returns. So I should shorten this up a little bit. Hold on here. I don't want to confuse anybody. Let's move this baby up. There we go. So we got higher lows on the log return Z-score. I'll change my password when I want. Leave me alone. Get tired of that. And here is our returns oscillator. Let me turn off my 45-minute. Boop. We go. We got a higher low here. Plus, and we talked about this before, usually when you create some bull div on the weekly and you get a bounce off the zero mean right here, which we did, these create some of the most powerful moves Bitcoin has ever seen. It's rolling over again. But here's the good thing. Are we going to get another lower low? Right? And people will be like, oh, but I thought you traded this. Well, what are these fancy lines? These are log return moving averages. These aren't exponential moving averages, right? These aren't simple moving averages. These are log return moving averages. They do mean something and they catch price. They really do big time. This is the 54 length variance log MA. Are we going to go down and test that bad boy? It's about, what is it right now? It's about 37.8. So here's what I'm saying. So if we go back onto this chart right here, we can get a wick below here. We can get a wick below 40K. Look where, so that was at 37.8, right? Or what, right? Let me get that read again. 37.8. Look at the 95.4 Laplace. 37.5. There's a lot of confluence in that area. If we get a wick down here and it does not bounce back up into this range, that is trouble. That is trouble. Sound the alarm, because it's gonna probably break through this 54, and then we got the 99 length down here at like 27. The 144 is down here at 22.5. I put a lot of weight on this stuff, but I'm looking at this bull div building. It's still building. There's bull divergence between price action and returns building, and that's why that gives me the bias of why I think that Bitcoin's going to find its candle close low. Okay, I'm not talking about Wix. I'm talking about I'm a pretty firm believer at this point that we're going to continue to close weekly candles up in this 68.3 Laplace distribution range. Now, does that have to happen? No, absolutely not. This is why most of us trade low time frame volatility. It's a no-brainer. Go to the 5-day here real quick. Same thing. Look at the log return z-score. I mean, look at the returns oscillator. This bad boy has been building div. Bottom of that data set and the bottom of that data set are setting a low here. Are we going to go lower? Is this 5-day going to come back down and bounce off the zero mean again? If it does it again, and here's what I was talking to MJ behind the scenes. It's like when this happens, this is what Bitcoin does. Guys, we're going to have that 10, 15,000 daily Bitcoin candle. Don't think it's not going to happen. This is what they do, man. They just shake people until they can't even think straight with these crazy volatile moves. Everybody gets discouraged. People get liquidated. They get tired of trading the market. And then the next thing you know, they pump it or dump it and leave everybody in the dust, right? They, capital THEY, do not want you to make money. That's what this is all about. And a lot of people miss the boat on Bitcoin. Could this be they're getting that pullback? They're trying to get that pullback for all their buddies? Who knows? Who knows? But I know on this 5-day right now, and we talked about this before, we've got the historical volatility z-score right here. That z-score is climbing down. Right now, it's at 1.8 standard deviations below the mean. It's literally almost at the 95% confidence interval. It's significantly positively correlated. When you have a positively correlated dropping z-score, price action will be walking down 100%. And I'm telling you, the freaking correlation of the AVR, this is volatility, a low length one, but it is volatility. It's starting to head negatively correlated. If we get expansion here, the z-score stays the same. The entropy, the correlation of our entropy is already telling you, hey, this entropy, what's happening with it? It is correlated. The correlation is increasing for a move to the downside, but it's random. It's random right now, okay? When it drops into blue, that's when you get a trend. And to be honest, this is why we use entropy. And I'm telling you, these big firms are just now catching on to entropy trading, right? I mean, we've been doing this for a while. There's a reason why we use entropy, because these markets are random 80, 90% of the time. You got to understand, you want to know when a asset is trending or if it's random. This is what entropy does for you. The entropy price, the Shannon entropy percentile, is contracting positively correlated. Every indicator on the side is saying price action down. But then you come over here and we've got bull div. We've got bull div on the 5-day returns oscillator, between the returns oscillator and price action. The z-score of log returns is working its way down to these lower confidence intervals. So this would lead me to believe, when did we get a 5-day candle? 20th. Today. We get a new 5-day candle today? I think we do. So this is going to be interesting. Probably on this close, especially if this thing dumps out towards the end of the day. This Z-score is probably going to be down here at the 90% confidence interval. Could get a bounce there. But you can see, when you get an outlier like this to the downside, you get an outlier like this to the top side right here, right? And that was the 67K high. You're usually going to work yourself deep down into these confidence intervals again. That could definitely, we could get a wick down into those lower areas. But I'm telling you, if we start closing candles below 40K, ugly. You're probably going to see 32K first. And if that doesn't hold, if that monthly second standard deviation doesn't hold going into the new month, we could get continuation. Probably the second SD on this next month's candle will probably be around 20K, to be honest. So, but as volatility traders, right? And you got to think of it this way. Did any of us really think we'd be able to get in on some of these projects at a low price again? Hell, me and MJ were talking about these blue chip altcoins. Oh, please. All right. Give me an $80 Solana, right? Give me a freaking like under dollar Cardano again. We're talking about Algo and Avalanche, all these good platforms. I would love to get into these things at low prices. So let's see what happens. It'd be fantastic for everybody. Because a lot of people miss the boat down there, right? A lot of people miss the boat down there. All right. Now let's see what the daily look like. Yeah, even the daily Z-score is dropping, heading back into positive correlation. Positively correlated contracting volatility. Down, 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 down. Look right now on the daily. The Z-score log returns is having an outlier, right? Having an outlier. There's an outlier on the variance, right? What is variance? Variance is a spread of data around the mean. This is a very powerful indicator, right? It's going to tell you when there's an outlier. And usually when you're having an outlier, what is an outlier in statistics? It's telling you you're having a fat tail event on the distribution. You're probably going to get a 2 standard deviation move or higher. Wait a minute. Did we have a 2 standard deviation move? Guys, we had a lot. We had a 2 SD move to the top side. Then it flushes out back past the 2 SD. Almost. Where's the 1 SD down here? 40.5. I'll tell you what, if this thing flushes out by the end of the day and you get a 2 SD move to the top side and then a 1 SD move to the downside, woo! Talk about some volatility, man. That is powerful. It doesn't happen often. And it's just shaking people, shaking them, shaking their confidence in their trading abilities, because you can't get a beat on this market, right? Every time somebody thinks, oh, this is what's happening. Oh, here's the breakout, wrecked, right? And even people jumping into shorts right now. What's going on in Bitfinex over here? Let's see here. Now, the shorts are falling off. Longs are piling on. All right, you get down back to this level. There's a lot of people, including myself, and they might not be using, but I'm telling you, I'm thinking this is a pretty strong level right here. I really do. For the long-term health of Bitcoin, if we don't want to see any more downside action, because if we break here, let's be honest, this thing's probably going to make a run to the 95.4, and it's literally down there at around 20K. So we want to stay up in here. We want to make that run to the 95.4 to the top side, and we're talking 6-figure Bitcoin, right? Which we all know it's going to be there someday. It's a no-brainer. It's a no-brainer indeed. All right, but I talked enough about Bitcoin. Here's what I want to do. First, let's pop over here on SPY. Because you talk about people getting wrecked today. We had a nice little fake out, right? The day started nice, right? SPY was up, I don't know. I think SPY was up. Well, let's see. Let's run some numbers here. Yeah, SPY was up a little over 1%, I believe, like about 5 points. And then I'm telling you, going into the end of the day, just dumped out. Where did SPY close? That's what people are like. So this distribution you speak of, sir, does it only work on crypto? No, man. It works on, I don't care if you're trading Pokemon cards or however to pronounce it. In the backyard, teach your kids a distribution. They'll be taking everybody's cards in the neighborhood. Terminal entrepreneurs. You get a wick. So you open up right here, right? You literally SPY pre-market opens up above the 68.3 daily Laplace distribution range and runs up, almost gets up here to the actually, let me see something. Yeah, there was the 1SD right there at about 455. So pre-market, it opens up above the 68.3, runs up immediately above the first standard deviation. Look at the wick. The wick comes back down, tests the top side of that first standard deviation, and damn near gets to the 95.4 Laplace and the second SD normal, right? And then look where it dumps out to, and look where the candle closes, sitting real pretty, wanting some dinner right there at the first standard deviation to the downside on the daily. This is how the distribution works. It's very powerful. Got a wick below it. But look, wasn't a very tight daily range. This was the daily price action volatility range right here. Gave a little bit of respect to it. Wicked up right there, but then just said, nah, we're going down. And it wicked to the daily S2, this green line right here. Right? But pulled up, closed inside first standard deviation range. There was the top side, there was the downside, there was a 68.3% chance SPY was going to close in this range. And the Laplace distribution range. It chose normal distribution today, and it did close inside of it. Let's take a quick peek at the minis, the Nasdaq minis. Holy shit. Look at that red dildo. Holy shit. Okay, SPY looked great compared to Nasdaq. So Nasdaq opens up, same thing. This green dotted line right here, where is the bottom of the weekly? Now, I talked about this. Has that been tested yet? Yep, boom. Beginning of the week. Red dotted line with the yellow dotted line. That is Nasdaq's weekly price action volatility range. That immediately tells you as a trader, Nasdaq's going to trend. Go to your regular trading chart, get some bias. Is it going to be to the downside or the top side? But this baby is going to move. So we come up, we reject off of the weekly bottom side. That's the S1. That's the first support level for this weekly price action volatility range. And it rejects, but bounces off the top side of the 68.3. Gets up above the first standard deviation normal distribution. Kind of wicked up into no man's land. If we're talking about on this 4-hour candle, because that's what I've got here. I've got daily, weekly, and monthly price action volatility ranges, and I've got 4-hour and daily normal and Laplace distribution ranges, current candles. So this 4-hour right here, it almost wicked up to the first standard deviation, dumped from there, and boy, did it dump. Let's see, dumped down below, and this is not good for Nasdaq. Why? Because it closed under the second. This is the S2 for that tight weekly volatility range. There was the first support level for the price action volatility range. There's the second. And it closed today below the first standard deviation normal distribution and that S2. What was that percentage move going into the end of the day? Holy smoke. 4.5%. That's a hell of a pullback in traditional markets. It really is. I mean, SPY was what, 1.5 or something? Crazy. Holy crap, Rooney. Let's go over. I want to see what's going on with the volatility. Or you know what first? Let's pop over here. Let's get a weekly read here. Because what, tomorrow, going into tomorrow, last trading day for traditional markets. And I was talking about this yesterday of hitting a 3SD move. That's going to be down at 442. But you also got to realize, right? I mean, there's a gap up there at what was it at? 464 or something? If you remember correctly, pre-market the other day, SPY dumped hard. So that's an area of interest. Plus, remember, that daily range never got tested up there either. So there's a nice area up there about 465. when we started out today and that baby started pumping, I was like, here we go. It's going to go up, test that daily volatility range. It never got tested. Wrong. Totally dumped. So at this point, I'll tell you what, if SPY gets a 3 SD move this week, we're talking 442. That could easily happen. Man, oh man, oh man. Let's do something real quick here. Scale this correctly. Where would be, do we want to do a really long projection? We could. Let's just see what this looks like real quick. Go back to the old scamdemic dump here. It's at 96 bars. Yeah, and it's been riding the 95.4 Laplace. All right, you can see right after, and this is why the distribution's great. You're not going to see any traditional technical analysis indicators be this incredibly precise. We open up that new week. Where does it dump to? Where's the wick go to the dollar? The 95.4% Laplace distribution range on that daily candle, right? And then the rest of the week, it rockets up. Where's it rocket up to? Look at the wick. To the 99.7 Laplace distribution range. That was a hell of a week. You do a 95.4 Laplace to the downside and then rip up to the 99.7 Laplace. You don't see that very often in traditional markets. That's a powerful move. And then we had another week where it climbed up to the 99.7 Laplace. Since then, it has been using the top side of the 95.4, right, as support. So where's that 95.4 right now? 428, 428.88 on this week. Very interesting. I would imagine next week it's going to be about 430 area. So I'll look for a bottom there for SPY. If SPY does not get supported by that 95.4 Laplace distribution range, you could see a lot of blood in the market. This baby could rip back down to the top side of the 68.3 around 275, 273 area. That'll have people crying, guarantee it. And people will be buying down there, I'm sure. When there's blood in the streets, you buy it up, right? Even if it's your own blood. Even if it's your own blood. But as a volatility trader, we don't like to bleed. We like to trade the low time frame volatility and not get wrecked. So that is interesting to see that long-term projection. SPY just climbing right up, right? Beautiful. Check out Nasdaq on the same note here. Whee! Pretty much same thing on Nasdaq. I mean, the charts don't lie. Oh, I got some very interesting little, that's my PB1s, I think. Chart art, free chart art. What the hell is that? I do not know, but we will just ignore that. Look, Nasdaq, same thing. Dumps down to the 95.4 Laplace, runs right up to the 99.7. Nasdaq, the top side of the 95.4 on Nasdaq's about 12.936. That'll scare the shit out of some people. Look at the top side of the 68.3 though, 83.72. Well, if this administration we got in place right now, the train wreck that's running our government, oh my God, who knows what's going to happen in these markets? But I'll tell you what, for their sake, they better get the Fed pumping some cash into the system, or they're in trouble. They're in big time trouble. So that's interesting too. Nasdaq, unlike, SPY had a couple nice bounces up to 95.4. Nasdaq's kind of found comfort just hanging out. You usually don't see that. I mean, it hasn't even came down and tested that. So in my opinion, yeah, Nasdaq looks a little stronger, but obviously, boy, it's dumping out big time. What's the 99.7 tomorrow? 14. Boy, that would be crazy. You'll go down 600 points tomorrow. You hear some crying going on. So let's go over here now. Let me go on the SPY, see what the volatility and the entropy is telling us on the daily. That's telling you run for the hills, for crying out loud. Well, I mean, on the daily to begin with, the variance was having an outlier, right? You got variance rising, negatively correlated with an outlier. That's why, I mean, look at the last 3 days. Boop, 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 boop. Straight down. Actually, from up here at the top of 472, started having the outlier right on that second candle right there. The entropy has dropped in the trend, but the correlation to the downside is decreasing. Here, I'll tell you something right now. If this entropy continues to trend down here, the one thing SPY's got going for it, that entropy got outside the second standard error band. When that happens, it usually likes to pull back. If it stays out here and this entropy continues a trend and you see the correlation starting to build to the downside again, look out. Look out, traditional market SPY guys. You could be getting wrecked. The entropy percentile is expanding, significantly negatively correlated. Look at the DLP. That's another good sign too. The DLP is outside the 99% confidence interval. And you know me, king of divergence, right? There is some bull div on the returns oscillator. There is some bull div from that data set down. There's not a low yet though. You need to recognize when I say it's building, you'll know if it's set, right? You got to have a data set, and it's not set at all. This baby's still dropping. So there is the returns, right? Price action follows returns. This is why we use divergence between the two. And the returns oscillator is turning up. It is turning up. And look at the Z-score log returns on SPY on the daily. It's outside the 99% confidence interval with an outlier. Those usually come out of there. So we'll see. We'll see. There could be pain tomorrow, and then coming into next week, maybe they bounce out of it. Not good over here on the deviation bands. I'm telling you right now, when you start spraying out these deviation bands like this, and look at the wick. Look how it rejected off the Gaussian mean right there. That is ugly. Oof. Second standard deviation band right now is at 436. The third is down here at 425. Very interesting indeed. Nothing else really sticks out to me. What's Nasdaq's look like? Yeah, see now, oof. This is not good. That is not good. Nasdaq is massively trending, correlation building to the downside. Yes. And then you've got the entropy percentile contracting, positively correlated, telling you that it's going to be walking down. And there is no bull div even building. Right? Price action heading down. Returns oscillator still heading down. You got the Z-score log returns. What am I seeing here with the variance? That is very unusual. I'll tell you what, that's going to change tomorrow. You will probably see this correlation change back. Man, that is nuts. It's because we opened up the day and had that pump first, right? For some reason, the variance is lagging a little bit on the correlation color. I mean, that should be red. Red is red. Red like a red-headed stepchild, but it is not. And oh my goodness. I mean, you're on a daily and you went up and whipped up two days in a row to the 144 length variance log MA and rejected both days. Not good. Not good. Same thing over here too. Look at the deviation bands spraying out, rejecting off that Gaussian mean. Whoops. Get off there. Yeah, not good at all. We'll be down here at the 2SD 13684. Oh my goodness. And let me pull up. Let's see what's going on here. Chart layout. Where's my base? There you are. Get rid of this indicator I got on here. Get a Pearson correlation up. Where are you at? Where are you at, my little Pearson? There you are. Let's correlate that baby with, let's see, Bitcoin. Let's correlate you with SPY. Let's see the correlation. Oh, yeah. Very positively correlated with SPY. Telling you right, these markets could be getting ready to just freaking flush, man. I mean, flush. They're gonna Bitcoin's gonna follow the traditional markets, or likewise, traditional markets gonna follow Bitcoin. Crazy. What about Nasdaq? I'm sure it's the same. Q1. There they are. Come on. Here we go. Oh, yeah. Significantly positively correlated. It is starting to slope down, right? It is starting to slope down, but yeah, when you got significant correlation like that, and all, I mean, they're all dumping. SPY, Nasdaq, Bitcoin, all at the end of the day. And did you notice when Bitcoin did their dump? Let's see here. Let's leave. Let's go onto the VRE. That's Nasdaq still. Hold on here. Go back to Bitcoin. Got right underneath the top side of the weekly range, right when traditional markets were closing, and then dumped. Right. And obviously, I mean, so it's not hard to see what's going on here. These things are following each other. Early market, right? Look, here's 5:30 Pacific Standard Time, 8:30 Eastern Time, pre-market. Just like Nasdaq and SPY. Then, I mean, these things are so highly correlated, it's insane right now. Is that normal distribution? Yeah. That is actually, is that when Bitcoin was at like 38 MJ? When was that? That little chart you posted there. Or hell, what is that? Oh, that's the monthly. Shit, what's that going back to? 2018? Or let me blow this up so I can read this damn thing. Oh, shit, that's a 2008 pullback, huh? Yes, it is. Okay. Wow. Good poll, MJ. For all you guys looking at that chart. Oh, boy. It's just banging off that 99.7 or that third standard deviation normal distribution. That baby's probably, these markets could really be getting ready to take a dump.
Yeah, man. I saw that. I go, oh boy. Oh boy.
Oh boy.
I mean, there's a
Not
90.
good.
There's a 99.7% chance it's going to stay within this range. So, what direction do you think it's probably going to go?
100%, man. Yep. I mean, literally, if you pull that chart up, there's a 95.4% chance that drops down to what number? Oh, wow. 240? I think that's what it is. Wow. That's brutal, man. You're going to see the...
good for shorts.
Could be
Quite
really
probably.
good for shorts. What's the VIX doing? What's this VIX doing? Oh, wow, up 7% going into the end of the day. I know it started dropping at the beginning of the day. Yeah. Pay attention. Coming into this new daily close on crypto here in about an hour and 5 minutes. Pay attention to where... Take a look here. Let's see. Where's the new daily volatility range going to be at? Wow, man. Yeah, it's not changing much. I'm going to put it right around. Yeah, to be honest, this baby's probably going to raise. It dropped yesterday from here down to here. The new one is probably going to be right around the bottom side of the weekly. Is that good or bad? Ooh, it's ugly, because that is going to be and I'm talking not just a regular ton, a shit ton of resistance right there, with the bottom side of the weekly price action volatility range and the new daily price action volatility range right there. See here, where is that weekliest? Let me see. Was that the S1 down there? Yes, it is. 40.3. And to be honest, that's probably going to be right where the first standard deviation is going to be around. I think we're going to test that 40K level again here real quickly. It's going to be popping. We could get a nice rejection off the bottom side here, go down and test, get a bounce from there. Just be prepared, right? This is what we do as volatility traders. We drop over here, we go into the main trading chart. We drop down on the 15-minute. Where you at, Bitcoin? Dun, 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 dun. Look at that. Woohoo! Red candle party. Look at that trend on the 15. Holy shit. Going in the end of the day on Nasdaq, right? That thing trended hard under the Gaussian mean. All right, Bitcoin, where you at? Yeah, let's do this real quick. Let's do a quick little workflow from the daily down. And now when you stare at these charts every day, it's literally been years now, you start to see the signature, and you can pop up the daily chart. You can look at it as a whole. I'm not looking at one specific indicator. I'm telling you right now, just like when you first are training to get your pilot license, if you've ever had a friend that just got their pilot license and you went up with them, it makes you a little nervous. They're squirrels. They're staring. You'll see them staring at different gauges, and it's just like, hey, dude, what's wrong with you? Right? But by the time, and I was in the military, I was stationed at Fort Hood. These guys flying these Apache helicopters, dude, they're seeing that whole cockpit. Number one, it's in your freaking helmet. They're seeing it as a whole, just like those stealth fighters. They're not looking at certain gauges, man. They are reading everything as a whole. You get a signature from staring at these charts, and you're able to look at the daily, right? You can drop to the 12-hour. The 4-hour. And as I drop down through, it just gets uglier and uglier and uglier. And everybody knows I love the 90 and the 45-minute chart. Everybody knows I love the 3 philosophy. Did Tesla pretty well. It's all about numbers, man. Numbers are powerful. That's why all my lengths are built on that philosophy, and they get nailed. They literally get nailed all the time. And is what I'm seeing. Yep. So is what's probably going to happen. Is the VRE at? This is what's probably going to happen. Because those higher time frames, ugly. Lower time frames, we're going to get a new daily price action volatility range up here somewhere. Bitcoin's going to shoot up and test it. That's probably going to happen first from what I was getting the read on that, especially the 15-minute. It's going to pop up here first, test the range somewhere in this area. And there's a high probability it's going to reject from there and test some lower levels, maybe the 40K area. So keep an eye on that. That's going to wrap it up for today. And then we got tomorrow. So we'll be back tomorrow, 2 p.m. Pacific Standard Time. As usual, I want to thank everybody watching live in the chat. We love you guys. We appreciate your support. Right? We're not your normal YouTube channel. Right? We're not your normal traders. I don't care where you go out there, whatever YouTube Jimmy you guys are watching, they're not talking about this stuff. You will never hear any of this come out of their mouth. And there's a reason. Number one, they don't understand it. They don't have the indicators. Number two, right? But they've all been misled into the traditional technical analysis. It's being pushed upon them, right? They're like feed for the herd. They are nothing more than liquidity. Retail traders are just liquidity for the big algos. That's all they are. That's why very few of them make any money. All right. So that being said, I want everybody to have a wonderful rest of your morning, afternoon, or evening, wherever you're at on this big, beautiful blue marble. I'll see you tomorrow, 2 p.m. Pacific Standard Time, guys. See ya.